Hello, everyone. Darcy Marud, CEO of Western Exploration. Good to talk to everybody again. It's been a while. Just wanted to bring everybody's attention to the news release that we just put out. It's highlighting the PEA that we completed with Kappas, Cassidy and Associates and Respect, both here at Abrino, Nevada, on the Doby George resource area, which is part of our Aura project. You'll recall that we have three resource areas on Aura. Doby George, the westernmost, Wood Gulch, which was a past operating mine by Homestake, and Gravel Creek to the eastern side of the project. When we went public in 2022, our goals for the company were to complete a PEA and ultimately a pre-feasibility study on Doby George, and to increase the Gravel Creek resource to a minimum of 1.5 million ounces. So with the news release today, we're ticking off that first milestone, which is the PEA at Doby George. I'm happy to report that it demonstrates an economically viable project, open pit heap leach, very simple methodology, very common here in Nevada. And at the $2,150 base case, which is the 3-year trailing average for the gold price, and that's with the number that we've completed the economic analysis at, it demonstrates a net present value at a 5% discount rate of about $71 million US dollars and an internal rate of return of about 25.4%. So robust project even at $2,150 gold. But when you look at a more current gold price of $3,000, we see that NPV increase to about 211 million US dollars with an internal rate of return of just over 62%. So robust economics at $3,000 gold price. The total life of mine after tax net cash flow is about $271 million. And when we look at that on an average annual operating cash flow basis, we see average annual cash flow of about 120 or $112 million, I apologize, after tax. So very robust. And when you consider that the capital investment is about $115 million to build the project, excluding working capital of about $12 million, it points to a very quick payback on this project given the economics. We estimate that at a $3,000 gold price, the payback would be at slightly less than 18 months. So very robust. The average mining grade for the operation is about 1.01 gram per ton. So with that grade, we create significant profit margins given the current gold price and the gold price economics that we've used in our studies. Going forward, we think we have the opportunity to continue to expand the resource at Doby George. We'll be discussing in the short term the exploration plans that we have for Doby George, which would include drilling around the current resource and expanding that. And then a little bit longer term than that, we're going to be looking at the Wood Gulch past operating asset that was operated by Homestake in the late 80s, where we have a residual resource there of about 100,000 ounces of oxide. And we'll be looking at a feasibility to maybe treat that at the Doby George facility. So we definitely have a path forward to increasing the resource base beyond what we currently see there. So exciting times for the company. I'm glad to share this news with our shareholders and all our stakeholders. We'll be working hard, again, as I said, to get this exploration plan to market and demonstrate a path forward to pre-feasibility for Doby George as soon as this year. Again, thank you for your attention. And if you have any additional questions, please check our website at westernexploration.com or reach out to Nicole Cowles, our Director of Investor Relations, or myself directly. Thank you and have a great day.